Hello number-curious friends, welcome to the channel where we talk accounting and finance. In our previous video we talked about debt-like items, obligations that behave like debt, even if they are not called borrowings. Today we will look at the other side of the equation, cash-like items. Because, just as not all debt is called debt, not every asset called cash is really available cash, and many assets that are not called cash can behave almost exactly like it. And as it is for debt-like items, understanding cash-like items is essential for calculating net debt and leverage ratios, valuing companies, assessing liquidity, and of course making good investment decisions. So, what are cash-like items? Cash-like items are assets that can be converted into cash quickly, safely, and with little or no loss of value. Here, you should ask three simple questions. Can I use it immediately? Do I know almost exactly how much it is worth? Can I convert it into cash very quickly? If the answer is yes, it is probably a cash-like item. So, cash-like assets have the following main characteristics. They are highly liquid, low risk, have known value, and have short maturity. The closer an asset is to actual cash, the more likely it is to be considered when calculating net debt. Let's begin with the easiest category. Cash and cash equivalents. Cash typically includes money in bank accounts, physical cash, demand deposits. Cash equivalents are short-term investments that can easily become cash. Typical examples include treasury bills, money market funds, short-term government securities. To qualify as cash equivalents, accounting standards generally require these investments to mature within approximately 3 months from acquisition. We have a separate detailed video on cash, check it out, the link is in the upper left corner. Let's have a look at our classical Apple shop example. You sell apples today. The money goes into your bank account. That is cash, no questions here. But you don't need that cash right now and decide to temporarily invest it for 1 month in a government treasury bill. This investment would normally still be considered almost identical to cash. Let's have a look at bank deposits. Are deposits always cash? Now things become more interesting. Suppose your Apple shop places $5,000 in a bank deposit. Should it be considered in the calculation of net debt? The answer depends on the deposit. If it's a current account and available on demand, it's cash for sure. If it's a 1 month's deposit, it would usually be considered cash-like. If it's a 6 months deposit, it may be considered cash-like. But if it's a 5-year deposit, it would normally be not cash-like. The longer your money is locked away, the less cash-like it becomes. Liquidity matters just as much as value. Let's have a look at marketable securities and investments. Many companies invest excess cash. These investments may include treasury bills, government bonds, corporate bonds, money market funds. Some of these are highly liquid, others may be not. For example, let's have a look at 2 companies. Company A owns 1 million in treasury bills. At the same time, Company B owns 1 million shares in other company. Which is more cash-like? Clearly, the treasury bills. Their value is stable, they can be usually sold immediately. Shares, however, may fluctuate significantly every day. Which value would you assign to these shares? From yesterday? From today? And if there was a bad day in the markets and shares dropped today, but with the potential to recover next week? If you're buying and valuing the company which has such investments, often you would ask management to sell such investments before the transaction and assign the actual value to it, less fees to sell these investments. In addition, these shares may be not openly traded on the market and their valuation and time needed to sell them may not be clear. The important message is, being an investment does not automatically make an asset cash-like. Let's have a look at loans granted. Sometimes, companies lend money instead of borrowing it. For example, our Apple business earns a lot of cash. Instead of keeping it in the bank, we lend $5,000 to another company to earn some interest on it. A question: is this cash? No. Could it be cash-like? Sometimes. If the loan is short-term, highly secure, and can be repaid quickly, you may treat it as a cash-like asset. But long-term loans are generally considered operating or investing assets, not cash. Now, a few words on restricted cash. One of the most important adjustments concerns restricted cash. Restricted cash belongs to the company, but it cannot freely spend it. Examples include collateral for loans, regulatory reserves, custom escrow accounts, legal restrictions. Let's have a look at our Apple shop. We have $5,000 in the bank, but $1,000 must remain as security for our landlord. Can you repay your bank loan with it? No, so you would exclude it from available cash. In this slide, there is often an attempt to treat rent deposits as cash-like. You should reject such ideas, unless there is a confirmation from the landlord that they are happy to replace the deposit with a guarantee, and it can be done quickly. But a guarantee comes at cost, so be careful and remember to include extra costs in your business model. Similar to restricted cash, there is trapped cash. Large multinational companies often hold very material amounts overseas, and sometimes moving or getting access to that money is difficult because of taxes, foreign exchange controls, or legal restrictions. This is called trapped cash. For example, the company has cash in the US, easy to use. Some other cash sits in another country with capital controls. No direct dividend distribution or loans to the parent company are possible, much harder to access. So, you would normally discount or exclude trapped cash from net debt calculations. Let's have a look at a few non-traditional cash-like items. Some assets create interesting discussions. Examples include listed shares, cryptocurrencies, gold, commodities. Could they become cash? Yes. Are they stable? Not always. For example, Bitcoin may be sold quickly, but its price can move by several % in a single day. Therefore, cryptocurrencies are often not treated as cash equivalents. Also, you may come across other cash-like items such as expected insurance refunds, litigation settlements which are yet to be received, cash expected to be received from the businesses you have disposed of, tax shield on debt-like items, income tax refunds, and so on. How may an adjusted cash position look like now? For example, we have reported cash of $3,000. Now we deduct $200 of restricted cash, $1,000 of long-term deposits, and add $500 of investments into treasury bills. As a result, we get to available cash of $2,300. That would be our net cash. In the end of the day, when calculating net debt, you should ask, how much of this cash could realistically be used to repay debt tomorrow morning? And that number is often much lower than reported cash. What are the common mistakes when analyzing cash-like items? Typical mistakes include: the first one, treating every investment as cash. Next one, ignoring maturity. And the next one, ignoring restrictions. Also, including long-term deposits as cash-like. And the last one, forgetting foreign cash restrictions. Remember, cash is not only about ownership, it is also about availability. Let's summarize it. Today we learned that cash-like items are assets that can quickly become cash. Liquidity is just as important as value. Bank deposits, treasury bills, and money market funds are often cash-like. Restricted cash and trapped cash usually require adjustments. For proper net debt calculations, you should consider adjusted cash, not simply reported cash. The next time you see a company reporting billions in cash, remember, the most important question is not how much cash do they have, it is how much of that cash can they actually use. And that's the snapshot of some cash-like items. If you have other questions, post them in the comments below. Thank you for watching. If you enjoyed this video, hit like, subscribe and ring the bell so that you don't miss the next video. See you soon and keep those debits equal to your credits.